My name is Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my YouTube station. This is the home of the 5 minute or less video. I don't babble any more than that, so if you can stand me, you're going to learn a lot. Anyway, I try to be informative and educational and give you the information you need to make an informative decision. I have a whole team of former IRS agents that really work for me. We work as a team. You will find my information below in the description section. We have, God, I don't know, about 200 years of direct IRS work experience. I don't know, I've worked 10,000 cases, and yeah, I'm an expert in this. If anyone tells you anything other than what I'm telling you, they're either lying to you, and the other thing is most don't know what they're talking about. Anyway, let me tell you about IRS payment agreements for businesses if you need to do that. So, as a former revenue officer, I have worked, God, probably a couple thousand IRS business cases alone. And how do you work an IRS business case, and what is it that you need to know? Um, IRS, when a case is assigned a revenue officer, IRS has usually three closing methods they use. You have to know these because they're used on every single case. Either your case is going to go into currently non-collectible, which is there for a couple years, a payment agreement, or yeah, you can do an offer and compromise and settle your debt. So how does all this process work? The first thing you need to know is you have to have all tax returns filed, and you need to be current. What that means is, let's say we're in October of 2022, you've got to start making your current tax deposits, or IRS just isn't going to work with you. They want to make sure your returns are filed, you fix the problem, and you showing them that you're making current monthly or quarterly or bi-weekly deposits shows them that you can move forward. The next thing IRS is going to do is they're going to want two financial statements if they're sharp. They're going to want the 433B, which is the business financial statement, and the 433A, the personal financial statement. They are trying to find out two things. They're trying to find out what assets you have possibly to liquidate, and they want to know what your income stream is and the expense that you have, both from a personal and business standpoint. They want to find out how much, in fact, you can pay. They're going to look to see if you're a viable business or whether your business should be actually out of business because it's not making a profit and you can't pay back taxes. So it's so important that you get someone who can fill out those 433As and Bs for you. I mean, we do that all day long. It's critical because IRS is going to make their determinations on your case on those. They're going to want to know what the fair market value is. Can you use distraint value? You may want to file an offer, but what are your options to go ahead and settle your tax case? There's a lot of things you need to know, unless one looks at your financial statements, they're not going to be able to tell you. Don't give your money to anybody at all, unless you give them your financial statements. I wouldn't even think of taking money from everyone unless I did a full evaluation to understand what you have going for you. Many times you can get your case put in currently non-collectible, which means you can continue your business, but you don't have to pay because you don't have the ability to pay. IRS wants to make sure you're current. You're making current deposits on your 941s, and you're filing all your returns. The penalties and interest run, but it'll give you a time to kind of catch up. So what a good tax practitioner does, or you need to do, is you got to go ahead and get a good look at your business, a good handle on it, and you have to find out, really, should I be moving forward? Should I form another company? What should I be doing? There's a lot of things that go into making these decisions. You can't just say, let's do this and let's do that. Somebody from the outside has to look at your business realistically and say, this is really what you need to be doing. If you want to represent yourself, have at it. Just remember that 433B and the 433A that you give the IRS is going to be critical for how IRS is going to resolve your case. Don't go into this naively. IRS is going to look closely at the money you spend and the revenue you have coming in, because remember, at the end of the day, they're a collection agency. Anyway, if this was helpful to you, please give me a subscription, because YouTube needs us, not so much at wow, but YouTube evaluates us, believe it or not, on subscriptions. If you have a question, leave it in the comments section. I'm happy to do a YouTube or a spinoff. One last thing you need to know: IRS can set up the trust fund penalty against you, which means they can collect this debt personally from you. They can collect the withholding and the Social Security from you personally. I've got YouTubes on that. If you don't know what that is, you better find out and call me. Thank you very much.